Everybody, welcome back to another Sunday Sessions. If you don't know what this is by now, it's where me and Luke, we just go through the markets together, we show you our analysis and basically just predict what we think a couple of pairs are going to do throughout the week. These are the ones we're going to be watching much more than the others, so throughout the week in our learning lounge in the main group chat we'll send through a lot of updates on these pairs as well as potential entry points. So anybody who is involved in that group chat, make sure to watch through this, pick up on the things we say, because we will be updating the analysis through the week and a lot of it will reference what we've said in this video. So make sure if you are in the group chat, you're watching through this. If not, get yourself into that group chat and I promise you will not regret it. But just to jump straight into it, I'm starting off on the gold, so XAU to USD. Now, quite simply, I believe I did actually put this one on last week's Sunday session as well, so if you've seen that one, you'll understand my longer term bias. So this low in the market right here, actually being a lower low in the scheme of structure to the left that we can't currently see, but you see that price ended up trading back down, breaking that low, putting us in a lower low. So we can expect that this high right up here is going to be a protected high from now on. What I'm wanting price to do is trade back up into this area because it's a distribution, because we've had smart money presence. We're expecting that unmitigated positions lie here. We want price to trade back up, mitigate those, distribute again, and then make that turn lower. And then this position in here reflects that. Of course, when price does approach, I will refine that stop loss. I won't just have it the size of my order block. I'll wait to find lower time frame structural points, put it above that, and then hope to ride that down. As I always say, I'll partial along the way, but my final take profit is a major structural low at the very bottom of a trading range. But enough of this higher time frame. Quite simply, my bias is going to be, quite simply, as I move lower, you're going to see how I believe we can sell here down into this demand zone, which should hopefully eventually trade us back up into this supply zone, and then we can get in on that position we want. It's not guaranteed that price will trade into here first, but it's just something I'm expecting given the structure that's been delivered. So looking into this now, this is quite simply just our most recent structure that we've been delivered, and quite simply, I was expecting price to trade up into this supply zone because, as you see here from this line, we failed to break the previous high in the market, which to me is structure putting in a lower high. So that's going to be bearish structure from here on out. So I made the assumption that we'd trade up, mitigate positions, distribute, which we have done here. If I just mark this up as Wyckoff, and then hopefully price now will displace. So what we need is price to break this low, which is showing us that bearishness is confirmed moving forward. Once that happens, we'll do this 3-box strategy again. So imagining that structure did something along these lines. It displaced down here. What we'd do is we would take this as our impulsive wave, so the blue box, and then what we'd do is highlight a point of interest within there, anything that's been left over, and then we'd eventually just wait for price to trade back up, wherever that point of interest may be, mitigate, we'll find a distribution again, and then we'll want to get in on that sell. What we can do from here is hope to hold that sell all the way down to that demand zone I just showed you on the higher time frame. However, we will partial at this final target just because it's a major structural point in the scheme of things. So that's quite simply going to be my bias on gold. So that is a much longer term outlook as well as a shorter term outlook. As I said, moving forward, you'd be looking to be a seller in this market, a bear. So just watch the structure. As I said, I'm waiting for this displacement to get in on longer term sales, but you can definitely look for intermediary ones through this area. But with that being said, that is my outlook on gold. Okay, so now I've just jumped on over to the US dollar to Japanese yen, another one of my favorite pairs to look at, and quite simply, looking longer term, so this is on the 8 hour, we see bullish structure for a while now. This market has been rallying with a lot of pressure. We've just set an extreme high, so this is a higher high in the scheme of things. Now I identified this demand zone, so this was our major last buys before we started this heavy rally upwards, and I'm just expecting the price is going to have found enough demand here to reverse, hopefully then putting in the next higher high in the scheme of things. So moving forward longer term, if you can find ways to be a long-term buyer, so getting involved any way you can at major structural points and riding that all the way up, managing the trade as you go along, but longer term, being a buyer in this market is definitely wise because we still haven't hit any upside targets this bull run to me is still confirmed going forward for quite a while. As a result, if we can get in at these major swing lows, these major structural points, this is actually a position we can ride for the coming weeks, months, and continue profiting off. So I'll actually dive deeper now just to see how we could get involved on those lower time frames. So what you should be able to see here, we had a major displacement. So this protected high in the market, which we were protecting because we were still in bearish structure, actively protecting the highs, breaking the lows. So from this displacement, that tells us that a reversal is incoming. We have now invalidated that once bearish trending market. So from here, I'm just expecting price to trade back down, identifying this last sell before we bought. Now I've got an alert set just above around 113.76. Just wait to see if price trades back down. Now what we do have to be cautious of is on the even lower time frames, we may keep creating structural points and continue rising with heavy bullish pressure, and we may never visit this zone. So it's not wise to just set your alert on that and wait all week for it to come. You have to keep coming back to the chart every day just to see if new structural points are being created. For example, if we were to just see price trade back down, find a hidden demand zone in here and then take off, this zone's now invalidated because this is our new structural low. This is the area we now want to be watching to be held, and therefore if price was to come and mitigate this area, it would also invalidate the bullishness at the same time. So just keep your eye on the market, wait to see where those structural points are being created. If we do have one created above this zone, you have to then redo that analysis, redo that 3-box strategy or whatever it may be that you do, just to make sure that your analysis is still valid and you can get in on those trades. Okay, so just to finish off on the euro to the US dollar, this is a pair I haven't been trading now for a while, just because I have really been waiting for the volatility to come. We were range bound, stuck in this area. We could still find trading opportunities, but it was much more difficult to get longer term holds, which are the ones that I prefer. Now we did break out. So midweek, we managed to break through this zone, finally clear this level of liquidity. We didn't come all the way to mitigate this supply zone. So I still do believe we are going to be bullish moving forward until we come all the way up, mitigate that. So I've noticed we have what seems on this time frame to be a rally base rally. So I've taken this as a demand zone, got my alert set there, going to hope for price to trade back down into this, accumulate, put that next leg in higher, which will be able to bring us here. So similar to what I was looking at with gold, actually, I'm going to first look for the sells to bring us down into a demand zone. Then I'm going to look to buy into a supply zone, and that's where we can get our much longer term swing position, hold that for a long time and continue profiting from it. So this is my longer term hold from the supply zone. This would be a more medium term buy up into that supply zone. And then if you were looking for more scalp like trades, I would look within this structural point here for intermediary sells we can take down into this point. I'll give an example of that now. So as you can see, I did actually manage to catch a sell position on this market from here, just identifying a supply zone that was left over from structure, managing to get in on a distribution that was just in this area on the lower time frames. We have since been trading down. This is the next major structural point that I'm concerned about. It's where we did have a nice push back up, which would have required some smart money presence to actually bring enough demand into the market to do so. We've got no price action coming back to this area, and we also have a high volume push down. So there is going to be market inefficiencies within this area. I'm just going to expect price to trade up, hopefully find supply in here, distribute, come lower, and then we can look to take another sell position from this zone with the stop loss just above that high, and then trade it all the way down into this demand zone I was talking about at the start. Now, as you will see here, I've now given you 3 bias. So we have the more shorter term trades where we can trade structure down into points of interest. And then as we go higher, we can do the same thing, trade structure into higher time frame points of interest. This is why it's so important to do that top-down analysis, understand where price is going longer term, so we have much more plentiful trading opportunities, and we can understand why price is doing what it's doing. So that is going to wrap up my section of this Sunday sessions. I hope you've enjoyed, learned a thing or two, and hopefully can profit from some of this analysis I've given out. This is all just opinion based on what I think the market is going to do through the use of my analysis and my trading strategy. None of this is financial advice. Regardless, I'll pass you over to Luke now. He's going to go through some of his own pairs, as well as give you an update on some of the trades he did last week.
How are we getting on, people? Hope everyone's okay. Just want to say thank you, James, for the analysis there. I hope you all enjoyed what he had to say and you like the predictions that he's got for the coming week. Now, let's take a look at some of the things that I'm seeing for this week and run past the ideas I've got as well. The first pair that I am looking at this week is the Great British Pound to the US dollar. This is one of my favourite pairs to trade, like I have told you guys before. Obviously, with it being a major pair, we can expect high volatility anyway. But with it being in my time session and most volatile in my time session, it's just great to be able to capitalise on those swings that you do predict and you do analyse. So before we jump into my top-down analysis for this pair, I just want to make you guys all aware of the major highs and lows in the market. So what you would do is you would look at these on the 1 week time frame. So we can see here that the red line that I have drawn out here marks out the high in the market. Obviously with this being the high as well, this tapping into the high. And this blue line marks the very low of the market. Now what this does is basically set boundaries and obviously gives you parameters to work with. So now we can see that since price tapped into this extreme low, it's done nothing but produce us with clear bullish structure. Now since tapping into this extreme high here, we have then gone on to see the market produce us with clear bearishness. So straight away, our bias on this market, or my bias on this market, is to sell into the market because this current trend is in fact bearish. And I say this every week, you want to trade with the trend and not against it. The trend is your friend. So now that we have marked out our extreme highs and lows in the market and we've distinguished this current trend, so we've had this bullish rally, we've had distribution here, and it seems to now be producing clear bearish structure. We're obviously wanting to capitalize on a short position. So moving down time frame slightly, now looking at this pair on the 1 day time frame, we can see this bearishness in the market a little bit more clearly. So as you can see, price is producing us with lower lows and lower highs, which is great as this gives us confirmation of bearishness and it gives us points of interest and places we can work with. Now, as you can see, what I've done here is I have marked out the most recent high and low in the market. So this marks the previous lower high, and this marks out the most recent lower low. So now we have marked out the most recent high and low in the market. Again, it gives us parameters to work on. So we know that in order for the bearishness in this pair to continue, price can't break above this point, as that would break structure. And price has to actually break lower than this last low that's being produced here. Now, if price was to break above this last high, then what would that be telling us retail traders? Well, personally, it would be telling me that price is now looking bullish and we could probably expect plenty of buy opportunities and for price to continue rising until it taps into its next level of supply, at which I would be looking to see how it reacts and see if there is any chance of any kind of reversal. Another question you might be asking is why can't it break this high and why does it have to break this low in order for it to continue its structure? Well, typically in bearish structure, you will see price produce lower highs and lower lows, and these are just impulses and retracements that happen within the market, and the same applies to bullish structure but the other way around. So in bullish structure you'll actually see price produce higher highs and higher lows. With every move down there has to be some kind of retracement, and with every move up there has to be some kind of retracement. The retracement is always smaller than the impulse. So just as an example, you can see this is the impulse going down, then we have a small retracement, we have its next impulse coming down, its retracement, its next impulse coming down, retracement, and then another impulse coming down, and this is its retracement. So without getting sidetracked, like I said, I have marked out its last high and low. This gives me parameters to work with. I know that price can't come above this point, otherwise it'd be a break in structure and it would invalidate my reason for selling. And we must see price break below this point to continue this bearish structure in the market. So the next thing we need to look at is finding that confirmation of the end of its retest and the start of its next impulse. Now, how do we do that? There are tools out there, indicators that are used to distinguish points in the market that could act as points where you could see price reverse. One of those being the Fibonacci. It is probably one of my favorite indicators to use when it comes to analyzing clear bearish and bullishness. And what you want to do is mark A to B. So A being the start of the last impulse and B being the end of the last impulse. So let's do that now. So we mark A, the start of the last impulse, all the way down to B, which marks the end of the last impulse. And then this gives you ratios to work with. Now price could tap into any of these ratios here and then go on to start its next impulse. But the most commonly used ratios and the most commonly respected are the 38.2, the 50 and the 61.8. They are also known as golden ratios. And the majority of the time we can expect price to actually react well from these, but it doesn't mean to say that you won't see price react off the 23 or the 78.6. Now looking here on the market, we can see that we have a lovely reaction off the 78.6. Now this is where understanding candlestick formations is really important. So obviously we can see clear bullish structure being produced. We've then had the tap into the 78.6. We've then had, on this day candle here, we've had clear rejection to the upside. So bulls drove the price up, but the candle managed to close actually lower down, producing us with a shooting star. Now this tells us that bears are taking over or could be taking over the markets and could be taking control of the markets. And then on the following day candle, we can actually see a large red candle, again telling us that bears are in control of the market. So there we have 2 days in a row where bears have actually dominated the markets and seem to be taken over, as well as a tap into the 78.6. And on top of that, it's all within this bearish structure as it's happening below this lower high. So there's 3 pieces of confluence there. We have clear bearish structure that seems to be forming still. We have a tap into the 78.6 ratio using the Fibonacci, marking the start and end of the previous impulse to give us an indication of the end of this retest. And then on top of that, we have candlestick formations, so a shooting star that has been formed. We have clear rejection to the upside from this candlestick here. And then again, with this one, we have clear bearishness. So all these things tell us that bears are still in control of the market. And this is just price following market structure. So now that we have those 3 pieces of confluence and the overall bias to sell into this market, we now need to take a deeper look into the lower time frames and find where we could enter in on this pair. So you might be wondering, how do we do that? Well, like finding the overall structure of the market, we can basically look at the current structure of the market. So we can see this clear bullishness, higher highs and higher lows. We have this area of consolidation or distribution, as some would call it. And then we have a break below this neckline here. Now, in order for us to enter in on this pair, what do we now need? Well, we need to see price starting to produce clear bearish structure coming down. And if we see that, then we know that our predictions on this market were correct and its next impulse is in fact starting. So as you can see on the 4 hour, we've got the impulse here that we've marked A to B, giving us these ratios. We can see the clear bullish retest here, which is great. And if we zoom in a little bit here on this retest, we can see how it's already set a lower high and a lower low in the market, which is great news for us as we are wanting to sell into this. And this gives us more confirmation that this bearish impulse is on its way. Now, looking at this pair on the 1 hour time frame, we can see this bearish structure forming a little bit more clearly. So we can see that this high here that it's set is actually lower than this one, and this low here that it's set in the market is in fact lower than this one. Again, this is great news for us as we are looking to sell into this market, and this confirms that the analysis we are doing for this pair is correct as we are getting more and more confluence the more we dive into this pair. Now, if you're a long-term trader in the market, you could actually place a position on the open with a stop loss above this high here, as this obviously marks the end of the retest. So you could have a stop loss of 100 pips, and you would obviously want your take profit to be at least double that. But we know, looking at the higher time frames, that price has to come lower than this point here in order for this bearishness to continue. So you could actually have a take profit of 500 plus pips and a stop loss of 100. Now again, this is for your longer term traders, as this move could take a few days, if not weeks, depending on the volatility in the market. Now, would this be a safe trade to place? Yes, of course it would be. We have distinguished the overall structure of the market. We have many pieces of confluence and confirmation in this bearish move, and we've already started to see clear bearish structure forming since having this tap into this 78.6 ratio. Now, with a stop loss above this previous high, assuming that this bearish move is underway, we shouldn't see price come above these points, as this would be breaking structure, and in doing so, would indicate a reversal in this trend and a continuation in bullishness. So our stop loss is safe above these points here. And with our take profit set down here, that is more than realistic, as this take profit is set just lower than these points here. And if this bearishness is to continue, price has to break below this point. Now, if you wanted to be a bit safer with your take profit, you could actually place it just above these points, just in case for any reason price doesn't break lower. And as you can see, we have a stop loss of 100 pips and a take profit of at least 475, and that gives us a 1-to-5 risk to reward ratio. And this is amazing if you're risking no more than 2% of your equity, as you could actually capitalize on nearly a 10% equity return swing from this position. Now, as I'm an intraday trader, I will be looking at placing a short position on this pair, but using the lower time frames. What I will do is I will distinguish the end of an impulse on the lower time frames, and I'll look to get in on the start of the impulse, setting my stop loss just above the previous high and giving myself a nice take profit within this region here. Now, the beauty of being an intraday trader and looking at these bigger swings is that we can capitalize on the same pair over and over again until the swing is over. So assuming this is the start of its next impulse here, we could in fact place a position with our stop loss just above this previous high. I like to go about 8 to 10 pips above. So this marks 12, so let's do 20 pips stop loss. Brilliant. And we want our take profit to be at least double that. So this would be double, which is 40. But as you know, this swing could last 400 to 500 pips. So we are going to give ourselves a 1-to-4 risk to reward ratio, which would mark 80 pips take profit. Perfect. We could place this position on the open on Sunday, and we know that this position is more than achievable. We've got our stop loss above a previous high, which should protect our stop loss as it's a structural point, and we've got a realistic take profit with a good RR ratio. Now I could place this position, take profit for it, and look to re-enter on the end of its next retest and the start of its next impulse. And we could do this all the way down until we get to this point here. Now, if you guys are interested to see how I do on this pair this trading week, then please join our free Learning Lounge group chat. I'll be posting all my results there and letting you know exactly where I enter and what I do with this trade. Now, usually I would analyze 2 or 3 pairs on the Sunday sessions videos, but as I've gone quite in depth with this one and I've broken down my analysis step by step, I don't want this video to be too long, so this is the only pair that I'll be analyzing for you guys today. If you enjoyed seeing a more in-depth look on how I analyze these pairs, then I can start to do this in the future. As previous to this, I would usually just provide my overall bias and give you some points of interest. But this week, I thought I'd switch things up and give you a more in-depth look on exactly how I like to analyze the markets. Now, this does come to the end of the video. I hope you've enjoyed both mine and James's analysis. If you have any questions or you're unsure about anything we have gone through, please leave a comment below and we will get back to you on that. And again, if you are interested in following mine and James's journey, there is a link in the description to our Learning Lounge group chat where we post all of our results along with a load of educational content to help you guys learn and prosper alongside us. And if you have enjoyed this video, don't forget to give it a like and subscribe if you want to stay up to date with everything me and James are posting on here. Now again, I just want to thank you guys for watching and I hope you enjoyed the content that we've produced for you today. With that being said, we will see you guys in the next Sunday sessions video.